CFTC Rule 4.41. These results are based on simulated or hypothetical performance results that have certain inherent limitations. Unlike the results shown in an actual performance record, these results do not represent actual trading. Also, because these trades have not actually been executed, these results may have under- or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. Simulated or hypothetical trading programs in general are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to these being shown.
There isn't much news out today, so I've got crude up and I've got the ES up. I'm desperate to get some trades on for you. I'm not going to be showing a lot of forex today, particularly intraday. I will show forex longer term, yeah, the ES, Larry, and I will be concentrating on that. First of all, there was an interesting question from Timo in the Hawkeye Skype forum, and if you are not part of the Hawkeye Skype forum, it's totally free and you can join it even if you're not a Hawkeye user. Just email team1@hawkeyetraders.com. I'll put that in the room. Let me just send that to everybody and ask to be put into the Skype room, and they will do so. Let me just type this. Also, could I ask all those people who've never been to a Hawkeye room before or seen a Hawkeye indicator, would they please just type in yes? That gives me a feeling of what the balance of the room is. Keep going. Welcome from Monterrey, Mexico. Well, that sounds exotic. Gosh. Okay. For Los Angeles, we've got people from Zimbabwe, I see Australia, I see Singapore, Bangkok, Germany, quite a few in England, Austria, some in France, Spain, and South Africa. Canada, well done. Melbourne, Australia, hi Theo. El Salvador, my goodness. Here we go. Anyway, let's carry on. For all these people who have never seen Hawkeye before, Hawkeye is a volume-based program. I'm going to take you through very briefly what the indicators are. The volume indicator, which is the backbone of Hawkeye, because you've come in to see us today, instead of 360, I'm going to send you the link, which again is team1@hawkeyetraders.com. If you want to get the volume indicator, you can get it for 97 bucks. It's only on that for 24 hours at the end of this seminar. Just email them and they would sort you out within the next 24 hours. So let me just first of all take the people who are absolutely first-time comers to Hawkeye. This won't take long for the others. We've got a big room again today. Thank you all very much for coming. I will just explain what you're looking at. This here is the volume indicator, and it includes these dots. It includes these yellow dots. Have I got white bar on? And it includes a wide bar, which hasn't come up yet, and I'll show that to you. So the indicator, the volume indicator, is this, the red for selling, green for buying, white for no demand. We then have a volume radar, which comes across here in dots. This really is only for daily charts or anything above 240 minutes, and it's telling me if something extra special is happening with the volume. And red is telling me that that's ultra high volume, cyan is telling me that there's ultra low volume, and there is another color, if that's on the chart here. Let's just see if it comes up. It doesn't by the looks of it. Let's just squash this up. Yeah, there we go. Yellow, which shows me high volume. So they are alerting me to what is happening. And you'll notice something that's quite interesting here. There we have two red dots telling me that there's ultra high volume. Whereas over here, where that green is higher than these reds over here, we don't call it anything. We call it normal volume. And the reason for that is it's looking back over a period of time. It looks back 20 bars and it sees what the profile is over those 20 bars. And the profile over these 20 bars is that's ultra high volume. If we come here and look back over these bars because of that high spike in these, it's just normal volume. So telling you, and if you're a stock trader, it really gives you the edge. It's particularly good on stocks. So if there are stock traders there who are not using the volume, the Hawkeye volume radar, particularly on their daily charts, I would suggest that they do. The next indicator we have is the Hawkeye trend, which are these crosses and the line and the dots. They're the sort of engine room of Hawkeye as well. The crosses of the stops. The line is if it all goes wrong and it hits the barrier line, and you have three inputs in this trend, and the dot is the trend. The dot is very important. I could have made that a solid line, but I have built in 6 ways the market moves, so which you can find on the website, and I sent out a PDF in my last newsletter. If you want my newsletter, just go onto the Hawkeye website, download the ebook, and you'll automatically be logged in to the Hawkeye newsletter. You can unsubscribe at any one time if you don't like my dribble that I send out. So there we have the trend, and you can see why I have it as a dot, because it shows me quite clearly that this is in strong downtrend. Then 6 ways a market moves. If you think of it, for the new people, there's only 6 ways a market can move, which is trend up, trend pause, congestion entrance, congestion exit, and trend reversal. So we've gone sideways here into congestion, and then we break down and we go into trend run, and right now Timo, as you can see, we've gone into our congestion. So we can also do some other clever things on this trend. We can, okay, Frank has asked a very important question. Thank you, Frank. What is the value of the volume indicator if we're trading FX? There is volume in trading FX because we take tick data and run it into the volume. So that gives us tick volume as opposed to contract volume, and I got to tell you it's about 85–90% as accurate as real volume. So, and I've checked that against the futures as well, and it works fine, Frank. We have 3 inputs that we can put on the trend: conservative, normal, and aggressive. I like conservative, but if we go to aggressive, you'll just see that, woo, now instead of going into congestion, we had a little breakout there. We can go back to normal. Let me just go back to conservative because I want to get on and start trading today. So there's conservative all the way down. But what I can do, which is pretty clever, I think, is to say, hey, after, well, we can say 15 in this case. Let's go here. We'll put that on. After 15 bars, pull my stop onto the aggressive setting. So now you can see the stop here suddenly jumps all its way down. And in fact, you would have been stopped out through here, because the rule is when it goes green volume, you use the cross. When it's red volume, you use the barrier, and you use the cross on close, or a touch of the barrier OCO, one cancels other. So it closed above the stop on that bar, you would have been stopped out if you'd moved to aggressive. If you left it all at conservative, let me just put that back to off, you can see the road through that. And that's always the payoff. Here, for example, we've ridden through that pull down there. I was having a conversation with another Hawkeye user this morning about stops, and stops are such an emotive subject, and we must do a full session just on stops. Stops, in my opinion, are used for the wrong reason. Stops are there if everything goes wrong in the trade. They are not there to be trailed close to, they're not a trend indicator. They're not a trend following indicator. They're there if everything goes wrong. And I get a lot of criticism that Hawkeye stops are too far. They need to be far away, because there was the example. You would have been stopped out there, you would have been suckered into a long here, whereas you just rode it all the way down. And yes, Larry, you could use the stops in forex. I will show you forex in a moment. We also have, for the absolutely new people who have joined us today, these yellow dots here, which are Hawkeye pivots, and they really show you in a downtrend, for example, and it's the converse for an uptrend. You expect, when you see these 3, 5, 7 bar reversals coming off each one, when you see these profiles at the top, look, 1, 2, 3, 4, you've got a 4-time isolated high top there. You know this market's going to be sold off. So that is the volume indicator. We have this indicator here, these lines, red for selling, white for no demand, green for buying. The volume radar telling us, alerting us when there's an extra special profile of the volume. We have the dots, the Hawkeye dots, the pivots on these yellow pivots, and we have wide bars here which just alert us to something extra special. And when you see a wide bar, 80% of the time the next bar closes within the range of the bar. As you can see in this instance there, it's closed inside. This, it didn't, telling us that there was going to be trouble, but if I look back, you'll see wide bar closes within the range. I'm not going to spend a lot of time on that. So Timo, I just wanted to take you through this. Timo's trading corn, and you can see that we've been in a very good trend down for corn, which correlates since 2013, a downtrend on corn all the time on the monthly charts. Monthly charts are too slow to trade on the futures, but it gives you an idea of where the risk is. Remember, we're only trading risk, we're not trading corn. So you're taking on more risk when you go long and less risk than you take short. Why? Because you're going back into the direction of the monthly trend, and as we've all been taught when we were trading, the trend's your friend, and that's what you have to trade. So sorry, I'm trying to read questions as they come in, which took me right off my flow of thought there. So let me just start again, because it was an important point. We are only trading risk, and the risk is that going long, you're taking more risk because you're against the monthly downtrend, whereas if you go short on the daily, you are taking less risk because it's in harmony with the monthly downtrend, and in this instance the weekly downtrend. Now let's drill down this a little bit further, Timo, and see where we're at. So let's just do our analysis. We're in monthly downtrend here. The trend dots are going down, the volumes, 3 months of volume against us. We know also on our weekly we are in downtrend, but we can see the volume has dried up behind us a little bit, and we have got some volume coming in last week which was above average. It wasn't high, because otherwise we would have pulled out the volume radar. Let me just put that volume radar on, because I'm not sure that it would have shown it. Let me just put that on, volume radar. No, it didn't, but I just, oh, I had it already up on there, look. So let me just get rid of that. So it didn't, but here we are on this, but something else has happened here. We've got an isolated low. Let me just get that. We've got an isolated low here, and if this week closes up, this bar here will also turn into a yellow dot and be an isolated low. So we've virtually got a double bottom there. In fact, we do have a double bottom, because, as you know, I like a bar touching the last pivot. So that's still straddling the pivot, so it would be a double bottom. Now if I drill down, Timo, let's have a look. We'll come into the 133 minute, and you can just see what we have there. We now have that trend up against us. So you can see that there is an uptrend that's come in, which would confirm the downtrend on this daily. And on that daily, you can see that after 2 bars of extra high volume coming in here, it went down. Look, there's the pivot bottom there, pivot high there. It's going to go back up. That's going to be another pivot there, which, remember, Timo, and we've met each other a few times at seminars, that's the duck coming in to crash. And we've now got buying volume, green, 2 bars of buying volume plus 1 bar of no demand that has come in. Classic formation of a bottom of a market. So if you were short, I would be closing that down or tightening up my stops for that very closely. And that would be my analysis on it, Timo. So I hope that you're happy with that, and that would clear you up. Timo has also asked, he's based in Austria, if there are any other traders in this room in Austria, just make yourself aware to me and I'll put you in contact with Timo, who lives near Vienna. So let me move off this and show you something else. I just wanted to show you, Timo, I don't have time to do sorry, I want to get some trades on, and I've been running 15 odd minutes already. I'm sorry, mate. I wanted to go to gold because last week we were saying that we have had a termination of the gold because we had a breakdown on the daily. Let me also get the monthly up here. We had a breakdown of the daily. That was not the commencement of a new trend. That was a termination of this uptrend. Can you see that? Because at the end of this week, if this continues on, we're going to get another yellow dot in on this bar here on the weekly, which is going to ensure that it's going to keep on pushing itself. At the moment, we are on a downtrend on our daily. It's gone back into congestion. It's going to struggle around these stops here. So let's see if it struggles. But at the moment, we've had a stop out of this uptrend of our daily. We're now in congestion. We're waiting for it. And I would not trade this to the short side. As you know, I do a lot on gold. I would not trade this on the short side till that isolated low there is taken out. The bias is to the upside, as you can see here on the monthly and the weekly, except we've gone into congestion. How do I know? 6 ways a market moves. There's my congestion parameter. That's where we went flat. So I go off that high, I go off that low, because that will become a isolated or phantom low. I have my parameters there, and I know exactly where I am. That's why you've got to learn 6 ways the market moves. I really hope that you all do so. Come in the next few weeks, I hope to be able to announce some changes coming to Hawkeye, and one of them will be that there should be a lot more education coming your way. Let me just take some questions before I move off onto other ones. Oh, Frank, yes, I need to show you that. Mr. Marcus, a tick is, if you imagine where the open is, every time a trade goes, which is of a different price, it vibrates up and down. So every time it vibrates up and down, that becomes a tick. Jeff, I'm sorry, it's moved on. Jeff wanted to know what buy. Yeah, I don't want to spend any more time on corn. I want to get stuck into trading. No, Frank, not all the indicators I'm showing you are included. Let me just go back to our corn chart. What is included is this indicator here, the volume, which is this histogram here, if you like. These dots here, these yellow dots, which are the Hawkeye pivots, and the wide bar. So it's a wide bar, the pivot, the volume, and the volume radar. That gives you access into the members area on the Hawkeye website as well, where there's lots of education. Okay, let me keep reading these, and then I want to get over. And the paint bar is the wide bar. That paint bar, Ron, is the wide bar. It shows twice average true range over 20 bars. And I have purposely taken off my fast forex today because I don't want to show that, because we just get hijacked into forex trading, and I've got equal numbers of e-mini traders, crew traders, etc. So this week I'm going to specialize on this. Maybe next week we'll do more on forex. So here, whoever asked me for forex, I think it was Frank, shows you the whole of the Hawkeye suite. Here's the Hawkeye volume, which, as you can see, being tick volume, it has equal heights, but it just shows you the buying volume came in right down the bottom here. So there was the buying volume at the end of this daily trend down here that came in, and it's come in here, no demand in there, and it's pushing itself up. Would I have taken that? The answer, Frank, is no, because we are in monthly downtrend here, and none of my volume is showing me any different. I'm in weekly downtrend here. However, last week I did have some green volume, but I want to see more than that. So I shall wait for the end of the week before I make any judgment call on whether to get back into this. Let me look at the US. Let's look at the biggest one, which is the Euro US. And what a messy chart that is. Well, first of all, as I said to you a few moments ago, we're only trading risk. I wouldn't trade this chart. I just wouldn't trade this pair. You know, I don't care. I just, look at that. There's so much risk going into this. Look, just sideways, chop, chop, chop. We're in congestion on our monthly. We're in congestion on our weekly. We're in downtrend, gone into congestion on our daily, taking on far too much risk. We know that all the action are in the pound pairs at the moment, but brace yourself. I think this autumn or fall for the Americans, we are going to see everything move on to the euro. I think we're going to coming into a very difficult spell for the euro, particularly with the Italian banks being as fragile as they are. And we've got to look at that, and so that whole euro, I think, is on my radar big time coming into the autumn. So let's just go through these. When you're a trader, you don't just trade one market and get stuck to one market. If you do, you're going to force trades. You're going to push trades that particularly aren't good trades because you're only looking one market. Go where the feeding frenzies are. If you know that oil's hot or weak, go there. If you know that gold's hot, go there. If whatever market is jumping, you get there. So let's go through this. We know that the pound has problems. Maybe it's overcoming them with Brexit, but look at these moves that we have here. Look, and these are the ones that you can make money out of. Okay? So they're the ones to look at. I wouldn't look at this one, for example, because you're against these two. So learn the trading three time frames and get those set up. Now I want to move off this and move on to the ES and see what we can do. And I've got crude up as well, but it's jolly hard concentrating on running a room, reading questions and looking at two markets all simultaneously. I'm not that clever. Let me just explain to people what you're looking at. Here are my 4 tick speeds. I like tick charts. We devised an indicator which gives us the tick speeds every day to be in harmony with the market. It's like the DNA of the market. It just shows us the tick speeds each day to trade the market with. I've already set those up. So let's cover them, and these are here. My slowest speed is 7,120 ticks, then half of that 3560, half that one, so half that, blah, blah, blah. I always like to look at what the daily is doing. So I know, again, 6 ways the market moves. What am I in? I'm in congestion here. So the market can go either way, but I'm not expecting a substantial trend run because we're in congestion here. Okay, the day so far is a down day. Why do I know that? I just put candles on my daily because it's a red candle showing me that the close is less than the open at the present time, and that's what the setup is. Okay. Oh, one thing that I did want to show you, and because there's nothing happening here, let me just get back to this. It's the crude. Yeah, let me just get back to this and just show you also on this corn trade, we have something in Hawkeye called Hawkeye Ads. And if you go and put the Hawkeye Ads on, you will just see that that generates a lot more money. And it's telling you, let's say you took one contract, say buy one, sell one contract, sell another 3, sell another 2, sell another 1, and exit all at the same time. So instead of being the rookie trader who just takes one contract, you've got to hit these trends when they come along to you. This gives you a multiple of 7 into a trend. So 1, 3, 2, 1. Yeah, just takes you up, and it gives you that leverage that comes in, and that does it all over there. So if you took 1, it told you another 3. You thought it was wrong because there was a pullback. Then it told you to get 2, then 1. You're eating a lot more out of each trend as it comes along, and that's very, very important. Let me go back to the ES. So let me just get concentrating on this. Let me just get the scaling up so that you can all see this properly, and I will now take you through it. So okay. Now these indicators over here are really cute, and I like them. It's called the Hawkeye Kiss. I call it a kiss because you'll see that sometimes they come together and smack their lips and sort of kiss each other. Maybe not on this one. There, boom, it comes down and kisses and goes off. What this is advanced decline issues, and what I've done, I've taken the advanced decline issues on the New York Stock Exchange, the NASDAQ, the Russell, and the Amex, and put them all into one indicator, advanced decline, and it just shows me what is happening. This is a 30-second advanced decline here, which is very fast. It's telling me whether there are more stocks being bought or sold, and this is 1 minute. So these two lines are inverse of each other. When the green goes down, the red comes up, but graphically it's much easier to follow. So this is telling me at the moment selling is in the market, more stocks are being sold, but it's flattened off on the 30-second, telling me that we're just going sideways. That's exactly what we're doing. And what we have down here is my gear changer, and this shows different colors all during the day, and at the moment it's just gone yellow. Can you see? So it's saying to me this is the time frame to trade in harmony with this time frame and this time frame. There was a gentleman who contacted me this morning and asked about the different times that you use on the gear changer. Let me just say, when you're on blue, you use the cyan, blue, and yellow. When you're on yellow, you use the blue, cyan, and red, and when this goes to red, you just use red. So this is what we're looking at here, and again, it's just sideways. So it's just telling me that nothing's happening. And this has just gone yellow now, so I'm not interested in this chart. I just come up to that. So these are my 3 lead charts that I now want to trade off. But there we go, that's better. Notice the other thing that I have on my charts. I don't have much on my charts. You know, some people, gosh, they're like bloody Picasso with their charts. And they just end up with so many Bollinger Bands. I'm going to tease somebody if they're in the room now. Oh, what was his name? About 20 moving averages. I don't know. It's unbelievable. Like trend lines. You know, you've got to see the wood from the trees sometimes, or the trees from the wood, and it just gets absolutely noisy. I like clear, clean charts. Learn your trade off 6 ways the market moves. Understand the volume, which this algorithm does for you. It does over 300 calculations per bar, and you should be okay with the right money management tools. We've got to do a bit more on money management, but there are so many good people out there on money management, and basically I think Van Tharp would be the one stop that I'd take you to go to. Dr. Van Tharp, learn the R principle, and that's a very solid money management scheme. So let me just look at some questions. Judy's asked me what's happening with Tomahawk. We're on schedule with that hopefully for October. We'll be letting you know more, Judy, closer to the time. So here we are, just sideways. You can just see that the trend dot here is flat, trend dot here is flat, trend dot here is flat. It'll go up at the end of this bar. We've got 620 odd ticks to go for that. We haven't been very lucky recently in the last few Wednesdays to get any decent trades on. That's because it's summer holiday, and of course this is Labor Day week, if you like, so a lot of people are still away for this week, and it'll jump next week, I'm sure. Crude has been a little busier. I'm just looking over at the crude. Crude is in congestion as well. Let me just show you the crude charts. Here are the crude charts. You can see that my red speed is in congestion. I'm on blue at the moment. So let's double check that I got the right. 8644432. So there we have that. Again, chop chop, nothing happening. 6 ways the market moves, congestion on our yellow time frame, congestion on our middle time frame, a little trend run up on our fast time frame. And we might get an uptrend coming in on this. And let me go back and concentrate on the seeing as you've asked Judy about the Tomahawk, I'll just show you this briefly. What we've been able to do with Fat Man also is show a 15-minute and a 45-minute Fat Man, or whatever time frames you like, on the same chart. So let's say this is all choppy here, but let's say I wanted to see the pound yen. As you can see, that's Scion. So if I just change this to Scion, magenta rather, you'll see that this just tells you what's happening. Both the 45 minutes are coming down. The pound is the brown line. The pound is just turning up. The yen 15-minute is just turning down, just congestions. So let's concentrate back on this. The ES will kick something in. And I'll keep an eye on, see if a long comes in on that crude, which it's not. So let me just concentrate on this. Let me look at questions now. Timo, it's so slow, I might be able to look at soy. Well, I've got an admirer in a guy called Douglas. Douglas, thank you very much. Nigel, you've got wisdom and a feel for the market. That I say is a breath of fresh air. Looking forward to your upcoming education. Okay, thank you, Douglas. Bonds. I'll have to close a workspace to get bonds up. Let me do that. Desktop, rather. Nothing happening on this ES. I'm not sure whether we should do this in August, close for August and come back after the Labor Day week. Right, so we should be on my tick speeds over here. So we should be on 784. I like bonds very much to trade in intraday. I particularly like just the yellow and the red time frame, and you can hold those for some time. And the blue 196, a bit more choppy as you can see, but these give definitive trends. So again, look at that, sideways congestion, little bit of a breakout, but nothing confirmed over here. So that's pretty uninteresting too. So I'm going to move that, because with bonds you're not going to get a big movement on that now unless there's some news out. Let's concentrate on this ES, and let me see if there are any more. That new Tomahawk Fat Man will be available to the Hawkeye Trade Room subscribers, Timo. That's what we're thinking of at the moment. Nothing's in concrete at all. As I said, there's some changes coming up in Hawkeye probably over the next 2 weeks, which will define quite a lot for us. So you can see that this is just bearing down, telling us that there's some selling, some buying that's going down. The green's going up, a little bit of buying coming in. This has got a little bit of buying coming in. The daily has now gone above its open, so it's starting to look long. Maybe the bias is coming in for the long side. Let's just see. Our trends are neutral here. So we're all in congestion. Now we've got an entry that's come in on our blue time frame. I'm interested in that. I want to see it take out these stops here. I want this one to go. If that had gone through with any conviction, I would have immediately jumped in. I always like having sort of three. Hello, some news must have come out. Was there news today? I didn't think there was news. Let me just have a look. Forex calendar, 3:10. Oh, George, FOMC, 3 o'clock. Jolt's job openings came in. FOMC member George speaks. George, maybe he said something that's upset us all. Anyway, let's get back to the job at hand. CAD news. Thank you, Michael. Whether that moves. That was interest rates, was it not on was it that not interest rates on CAD? BOC rate statement. So that's what that was. So that was my trigger bar. This came in, there was the bar, that was my roadkill telling me that volumes have come in on both time frames. What do I want to do if I put my actual volume on this one? You'll see it came in there. It's got wide volume. I take these off because I have to have as much real estate as possible to show you all. Let me just close that one down a bit. Bring this one down. So I'm just waiting now to see that high taken out over here. It has been an incredibly boring 5 weeks, this. And it's been very disappointing for me running the room for 5 weeks, because I think I've had only 2 weeks of trades that I've been able to put on in this time frame. And I am suggesting that we move to a Tuesday also, where there won't be so much news coming out. Timo, no sailing this August. No, I did a lot of fishing. It was very good fishing. A lot of nice sea bass this year, but we've got a new rule over here. We're trying to preserve the fish, so we only can take one a day. And it's been a real bugger because it's been such a good fishing time. I've had some very big fish, so I've had to put some big fish back that I normally would have taken, but I guess that's the whole purpose of it. So you can see the purpose of the trigger bar. That was the trigger bar. Hasn't taken it out by 3 pips or 3 points, whatever it is. I'm just sitting here. Ask me some questions. Oh dear. No, the trigger bar's not new, Ron. It's just me on my own trading. I mean, this came in here, and I always teach you to look at 3 time frames. So again, it's risk I'm taking on, because here on my middle time frame, as you can see, I'm in congestion. There's another way of knowing congestion. All the stops here are flat. Can you see all these red crosses and the line? They're all flat. And we also know the price struggles as it comes up to the barrier and these stops to get through. So it's been up there twice, hit it, come back. And that's why I elect to say, okay, it is all set up. Let's see if there's any strength, validity in that signal. Boom. Had the next bar immediately done this, I'd have been in, because it's showing there is strength and it will push up through here. But at the moment it's just not. And had I not been in congestions on here and congestion on my red time frame, I'd have jumped all over that. But there's no point doing that. And as Douglas would agree, that you're not going to trade anything. Now hold on, this is going to jump out here maybe. So let's just wait and see. Judy, I presume there'll be the normal annual Hawkeye get-together in Palm Beach, which is always at the beginning of March. There might be one probably run by Randy in Los Angeles, and he might well do one just after Christmas or after Thanksgiving even. So Philip has asked, how do you configure your trigger bar in the roadkill setup? Oh, that's easy. But don't let me digress here. We've got an entry that's coming off here as well. And now this was a down. See, it went up to the trigger and just came back down. This is very easy, Philip. You've got volume roadkill. If I do the style, you've got it as a point. You've got it like that, yes? But if I go to histogram and do that, it comes up as the bar, okay? So there you had the break that came in. If I look at the times across here, I've already told you I want to see that trigger bar taken out there. Let me just put that line on it. You know, this is slow today. There wasn't a close above it. Let's just see, it's trying to come up now, and you're getting a slight angle coming up on the dots. You've also got buying coming in on the 30-second, well, it's already in, and you've got buying coming in on the 1 minute. KISS, both lines are going up, showing that stocks are being bought. But hey, boys, there's not much momentum in this. The bias is to the upside. You know, this is an uptrend. Green, 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 green. It's all green, but we just don't have the momentum. I want to see that bar that was generated there taken out. And it's not being taken out. By Frank. Douglas has asked a question, you know, hold on, this is going to try and get in, yeah, what are you going to make out of it? If I put on my format window here and put my right axis on, you can see it's gone from nowhere. It's gone two points, and that was if you were lucky enough to get the bottom and lucky enough to get out of the top. With the spreads, you would have made maybe 1 point, and with the commissions, it's not worth it. Douglas asked a question which really is about the time frames that you trade. You all know my clarion call. You make money in the big time frames, you know, daily, weeklies. Trading off this, which is a 1.1 minute chart and a 2.2 and a 5.5 minute chart, can be where the money is when the markets are fast, but when they're slow, there's absolutely nothing. Crude is in congestion across the board on all time frames. I don't think I've seen anything quite as slow as this for such a prolonged period of time. I was really thinking that this Wednesday would be off to the races after Labor Day, but I guess everybody's still at the Hamptons, on the beaches, doing whatever, and next week the rodeo starts, or rodeo starts. William, if you go onto the website, there are various choices for you to get the software. There's a professional package, traders package. You can also buy each indicator one by one, but that adds up to about twice the cost of the individual packages. So go onto the website and find out what you like. The trader software is just under $1,000. The professional is just under $2,000, and you can choose individual indicators. And as I said, Felix, you could be right. The quiet before the storm. I think we're going to be in for a cracking next 3 months. I really do. Yeah, and Philip, thank you for reminding me and telling everybody this Friday is a rollover to December contracts. Thank you, Philip, for reminding me that. Now can you see the importance of that trigger bar? You know, it hasn't been taken out over there on a close, and I'm just watching it. And can you see that the time we were on 1.1 minutes? gone down to 1.4s now. Crude is doing absolutely nothing. Bonds are doing absolutely nothing. Let me just have a look. I'm saying absolutely nothing. Bonds are doing absolutely nothing. As I said to you guys, if you're new, the whole of the volume indicator package you get for 97 instead of 360. It's available in TradeStation, Ninja, eSignal, MT4 and multi-charts. Can you see how many times it's come back and tested this? 1, 2, 3, 4, 5, 6. Felix says the best trade on crude was Monday with the market closed. That leaves the grains and the metals. Why don't I just open up intraday crude gold? Just close this one and open up well, thank you very much. That's the one that we should have been trading this morning. So that came in here at up past the hour, and there we have it. I'm not sure I have the right. Oh, that's Newmont. Hold on. Well, there we have it there on the December contract, and these are the right tick speeds because I was doing it this morning. Let me just cover that up. So there you had it at just after 3 o'clock. We came out of our congestion here. We were already in downtrend here. Goodness, who sent that to me about looking at gold? No, it's not compatible with TOS, Hunter, unfortunately. The reason is that TOS is an open platform. If I put it in TOS, then you all have source code. And if you have source code, that means that Hawkeye doesn't have a business. You know, there's pirates out there in Hawkeye, but they've got very old stuff. Jones asked me what percentage of my own trades are successful. I'd say about 70%, something in that region. Maybe a bit less. Let's do 60. But my losses are very small, and I really hang into these trends. Look at this. This is what we should. Who said gold in here? The best trade was the one you should have taken. Is Quest trading Canada, Larry, a same as TradeStation? John, sorry, I don't understand. Oil news in 5 minutes. HFT. Well, yeah, you can get this all on MT4, Larry. This would have been the one. And what I did prior to this for you, I put all the volumes up from this is the volume off this time frame, this is the volume off this time frame, and this is the volume off this time frame. So you can see all the volumes, oh, high frequency. But it doesn't, Peter, because I'm normally trading. If I'm trading currencies, it's 480 minutes and above, and everything else is daily, weekly. I do some small intraday stuff, particularly if it's a rainy day and I'm stuck in front at home, particularly in the winter, I'll do it, but it's not where I make my money. My money's made on daily, weeklies, and on 480 minutes on forex against weeklies and dailies. Larry, it should. It should work for the Canadians on their MT4 data feed from their broker. And let's just see if we had taken that trade, where we would have come to. Too much stuff going on here. Grab an order, grab an. These are the ATRs, average true ranges, that we look at. There's a money profit-taking program that we build around this. And also, if you wanted to do your ads on this, why haven't I got ads on this? This is a workspace I open up just for the Thursday room, so it doesn't have all my this is all stuff that I used to do, done in there we go. So now if I do this, it hasn't added to this run yet, it's just taken one on this, and this is the problem. This is a 1.1 minute chart, so this has brought itself all the way down. It's touched the blue, it's come back up, the dots are all going down. Look at the 6 ways the market moves, you know that you're in solid downtrend here, and this is going all the way. Glenn has just said Nasdaq's new high, which probably means that this will be breaking itself out on the ES. There we go, we might well get a new entry, but we're up to time in a couple of minutes. It's just doing nothing, it's just going sideways. I read a great article this week about what's going to happen, or what's going to happen, what somebody thinks is going to happen. They were purporting that market could be in for a huge rally as the euro and the Japanese yen get into huge problems this autumn, and all the money and bonds are not bringing back anything, any yields, and money will flow into the American market. So here we come. This looks interesting now. If we put the volume on, let's just watch this. There's the volume through there, choppy. There it came in green here. Still, there was the first close, if I was looking. There was the first close above that trigger bar back here. So you could have had a small one had I been concentrating, not looking at 2 other charts and speaking. But next week should be a lot more. We should get a lot more action next week. And everybody's back. So everybody, I'm wrapping this up now. I can see a lot of people are dropping out of the room. It's the top of the hour. Thank you all very, very much indeed for being part of the Hawkeye family, and look forward to seeing you all next week.